This evening's Federal Reserve meeting sees the Fed likely raise rates for the first time since this time last year. Of course, December of last year sparked a 10% depreciation in terms of the Dow, so the question is, are we going to see something similar this time round? The likeliness is that we're not going to see that. Now, bearing in mind last time we saw a 72% chance within the markets that we were going to see a rate raise. This time round, markets are factoring in a 100% chance, and actually you're seeing an inverse from what you would expect to see in the lead up to this meeting. That is, we're seeing the likes of the US dollar actually weakening, and we're seeing a big move higher in terms of equity markets. Does that mean that any sort of raise of the rate is already factored into price? Well, quite possibly. Now, in terms of what else to look out for, we have got, of course, economic projections coming out from the Fed. Expectation is that we're not necessarily going to see a major shift from that. We've also got the dot plot. Now, the dot plot essentially sets out where they think rates are going to go in the longer term. Now, currently, we're expecting 2 rate raises in 2017. And if we are going to see any change from that, that would likely be the driver of any big market movements. I don't think that will necessarily be the case either. So really, it's all about the small nuances within this release that's going to move the markets heavily. And if we did see a big move in one direction, and it doesn't necessarily come from any sort of basis, but more just the event itself, there is a good chance that it could actually fade that move and then move back to the levels prior to that actual announcement. Now, in terms of some of the charts, we wanted to first look at what's happening in terms of the FX markets. Euro dollar, of course, is the most commonly traded currency pair out there. So we can see here on the daily time frame, 5 mark, that is, funnily enough, the low that we saw back in December 2015, which was the month that we last saw the Fed raise rates. Now, what happened last time was that we actually saw a big move higher in terms of euro dollar. So actually we didn't necessarily see that big dollar strength move that you would expect alongside a rate rise. Now, are we going to see something similar this time round? Well, look, the trend is certainly very different this time round. We have been seeing a move lower. Have we seen any reversal signs? Not quite yet, but there is the potential for a bounce, much like we saw last time this time last year. In terms of the weekly time frame, we can see that essentially we've come back down to the bottom of this range and we are seeing some strength. So if we were to see some sort of US dollar weakness, which would be counterintuitive, but given the way that things are going so far this year in terms of the Brexit, the Italian referendum and the US elections and the market movements associated with it, you wouldn't put it past market. So we could potentially see a bounce, and if we did so, then really that could form the basis of quite a long-standing move for this currency pair. That being said, this also puts us on a pathway of a big differential in terms of interest rates, where people are actually moving back into the US, and that should go in favor of the US dollar over time. Now, crucially, for us to break out of this range, we'd need to see a break below 104.62. And if you look on the monthly time frame, you can see that essentially this range, the sell-off coming into it, means that this range should be seen as consolidation. So the breakout, you would think, would occur to the bottom. But for that to occur, we'd need to see a break below 104.62. And until that happens, there is still a chance that we could see a bounce for euro dollar. Now, I also wanted to touch on what's happening in the Dow. Quite frankly, it is a bit of a one-way trade at the moment. You can see that essentially it just keeps going up since that US election result. I don't necessarily want to stand in the way of a train, and certainly given the fact that, the fact that we've seen sort of rising equity markets despite what people had previously perceived as negative news in terms of the likes of the Brexit and the Italian referendum and the US election, there is a good chance we could see something similar. An hourly close up above 199.56 should give you another bullish signal for that next leg higher for the Dow.